crazy time that we're all living through. Today is Tuesday, April 7th. And just a little over 3 weeks ago, on March 15th, the Federal Reserve lowered the federal funds rate to all-time historic lows of a range between 0% to just 0.25%. And a lot of homeowners and real estate investors at that time immediately started thinking about refinancing their mortgages to get the lower rates. But as more cases of COVID-19 spread throughout our communities and shelter-in-place orders were being issued, the mortgage industry experienced some hiccups and pricing didn't immediately adjust. But now that we are working through these logistical wrinkles that are all getting ironed out, the mortgage market is picking up momentum as people now go to refinance, do cash outs for different reasons. There are a lot of questions around this topic, and I'm glad to have a mortgage expert here to take us through the state of the mortgage market. My guest today is Bart Welles, a seasoned mortgage expert with Guarantee Mortgage. Bart has over 20 years of experience and access to over 500 different mortgage products to meet the needs of a wide range of borrowers. And his invaluable knowledge of this industry is particularly helpful for real estate owners looking to refinance or get best mortgages, real estate investors looking to maximize the return on their investment, as well as first-time home buyers looking for the right mortgage. So with that being said, I'd like to bring into conversation Bart Welles. Hey, Bart, can you hear me?
I can. Can you hear me?
I can. Welcome. How are you?
Good. I'm doing well. Thank you for letting me join the show.
That's my pleasure.
I'm sheltering in place with my college twins. Yeah, it is a very busy time for us. We've gone through a lot of gyrations in the market. It's been a very interesting market because over the past several weeks, month ago, as COVID started to pick up steam, people started to get worried. Investors were selling stocks, moving money over to the bond market. It was a setup for this nominal refinance phase, which we got started and locked in a bunch of super low rates, got product underway. But then the market unraveled in an interesting and unusual way, and the mortgage market became part of the credit crisis that's being experienced on Wall Street. And so we've actually seen with some different product sectors, we've seen rates rise, we've seen some lenders retreat, but the thinking is that from here, rates are likely to go down and we're going to be in a low rate environment for a while. There are a couple factors that impacted the market. One, Fannie Mae and Freddie Mac, so government-backed loans below $765,000. They said it's okay for borrowers to do what's called a forbearance and not make payments for 6 months. And we'll talk more about that later in our conversation, but that impacted lenders' willingness to put money out there at cheap prices. I think also investors that would otherwise buy the pools of loans were worried that maybe they shouldn't be buying pools now because rates might go down. And there was so much refinance volume that it's put some temporary upward pressure on rates. But again, we expect to see that improve over time. For loans $510,000 and less, pricing still cheap. 30-year fixed money is available at 3.25% with no points. Loans higher than that, between 510 and 765, the pricing's a little out of whack. That has to do with some of the new guidance for Fannie Mae and Freddie Mac to be worked out with Fannie and the lenders, and also some of the debt relief issues, but that should be ironed out in the coming weeks, and we should see rates fall. And then for jumbo loans, pricing's 30-year fixed are at 4%, and there's adjustable rate mortgages money available in the 3s, and it's still possible to pull out a lot of cash. I have one borrower who's doing a $1 million cash out, getting a $2 million loan on a property. And that's all available in today's market.
All right, so we came out of the gates pretty fast there. So just to retrace some of our steps, so the Fed lowered their target fund rate 3 weeks ago, all-time historic lows, and we were all expecting mortgage rates to come down to meet them. And it sounds like what you're saying for at least some of the higher mortgage amounts, that hasn't been the case yet. So this may not be necessarily the best time to refinance. Am I hearing you right?
Yeah, it's there was a short period where rates really came screaming down, and then we saw them go back up. So in certain categories, it's not the perfect time to lock in a rate. But because we anticipate that rates will fall, it is a good time to work with your lender, your provider, whoever you use, or you're welcome to contact us and get your loan package together and ready as we see, presumably, as is forecasted, we see rates fall over the coming weeks.
Gotcha. Well, so speaking of rates potentially coming down in the upcoming few weeks, let's talk about the existing homeowners. Let's say for those people that have an existing mortgage, and depending on the amount of money that they owe, should they, based on the amount of money that they owe to the bank, what should they do? Should they reconsider refinancing right now, or wait? Mention some of those amounts again.
Yeah. So if one's loan amounts is below 510,000,
Okay.
then it's very low, and it's a good time to consider refinancing. Low being 30-year fixed rates at 3.25 with no loan points, which historically is a super low number. So for folks with loans in that category, it's an interesting opportunity to refinance and pull cash out up to the loan amount of 510, 400. For folks that have loans higher than 510, 400 and up to 765,600, this is a time to wait because we're expecting the pricing to come back. It's still a good time to be getting your loan package together and get things ready with your lender. So once the pricing falls, you can take advantage of that. And then with jumbo loans over 765,600, same thing, money's available. It's not as cheap as we anticipate that it will be. But having a conversation with your lender and getting a loan package together and having a strategy. So either our company or some company can be, periodically touching base with you and just giving you rate updates. So we help you see the dip when it occurs.
So I think there may have been some internet issues. You froze for a second, but I think I heard you say that for those jumbo loans of 765,000 and above, getting the loan documents ready and then waiting because you're anticipating a dip in rates at those higher amounts. Is that correct?
Yes,
Great.
That's correct.
Well, so this is for the folks who, let's say, maybe considering refinancing to capture the lower interest rate. What about some folks who are existing homeowners, but they've been financially affected by the economic downturn and maybe they're having a hard time paying their mortgages? Can you talk a little bit about what they should be thinking about, and can they pull money out as well?
Yeah, so people that are salaried, that have been laid off or temporarily lost their jobs, they can't get traditional financing right now. Self-employed borrowers who might be in retail or in an area where it would seem that their business has been impacted by the virus. It's going to be hard for those people to qualify right now because lenders are doing extra due diligence on employment all the way up to 3 days before a loan's funded. Lenders are double checking. So it's tighter. So for that group of people, lenders are offering something called a forbearance, which allows you to not make your payment. And it depends on the product and the lender how long, but it's basically 3 months to 6 months. So for loans that are owned by Fannie Mae and Freddie Mac, and if touch base with me, I can quickly check for you and tell you by putting in your address. Those loans, if you can show need, and the need hasn't been qualified too much yet, but it doesn't sound like there's much in the way of need. And if you say you've been laid off or your income's down, that should be sufficient. Then they can get relief by calling their servicer and requesting the forbearance. or 6 months. At the moment, the payback plan is to have those payments added, but you owe them in the forbearance period. We're hoping that Fannie Mae and Freddie Mac will allow them to be tacked on the loan, so you don't have to pay them until you're at the end of your loan. But we're waiting for that guidance to be solidified. And then for jumbo loans over 765, each lender has their own rules, but pretty much most lenders are allowing one to at least not make the payments for a few months, recognizing all that's going on. If somebody has an investment property and they really need to raise cash, it's possible to do a private money loan if you're not employed, but those are super expensive, and you have the points associated with them. So that's, sort of lender of last resort, given a choice.
So I'm curious. Have there been any guidance from the government around this emergency stimulus plan that was just signed into law? I mean, does it apply to mortgage banks and companies? Is there something specific available for financial relief for folks in trouble?
It's relative to mortgages. It's pretty much having a period of 6 months to not have to make your payments if it's a government backed loan. That's the main thing. There's not additional funds coming in, and as I mentioned earlier, it's tricky because there's this forbearance allowance out there for people, but some of the logistics and finer details haven't been worked out with the lenders and the servicers of the loan. And as it works now, for companies that send out the mortgage payments, whether or not they collect the mortgage payments from the borrower, they're required to send the money to the mortgage-backed security pool. So for big servicers like United Shores or Quicken, there's discussion about possible needing some cash infusion to help these companies, handle this period where they're not having income from the borrowers, but they need to pay income off to the pools. And we're kind of waiting for that guidance, and that's part of what's holding the pricing back.
Bart, there's a question that's coming in from Leah. I'll put that up on the screen. So is there any relief for people who rent through Airbnb and HomeAway?
Yeah, I mean, you can contact the lender or the servicer of your loan and ask for a 6-month forbearance where you don't have to make the payments.
Can you explain the forbearance and how that works in a bit more detail?
Yeah. So the forbearance is a term that's being used by Fannie and Freddie to say that you can have relief from your mortgage obligations for a period of up to 6 months. And you just don't have to make the payments. But the big question is, all right, so if you don't make those payments, who's going to? Right now, you still owe the money, and the payments are due at the end of whatever your negotiated forbearance period is, whether it's a month, 90 days, or 180 days, you need to make the payments. We're hoping that Fannie Mae and Freddie Mac will let you tack them on to the back end of your loan, but that hasn't been worked out yet. With some of the jumbo lenders, they are automatically allowing payments to be tacked on. And in regards to Leah's question, one of my clients who's a investor that has a bunch of properties in LA, they contacted their lender, which is Wells Fargo, and Wells Fargo allowed them to not make payments for 6 months and really all they had to explain was that how this has impacted their business, because they're in the real estate investment business and they've got a lot of tenants. They're more commercial than residential, but they have tenants that they can't pay because they're retail.
And Leah, thank you for asking that question. If it's on your mind, it's on a lot of people's minds, and it's a great question. But I just want to take another moment to talk about the forbearance, because this is something that has to be paid back. And as I understand, that 3-month or 6-month forbearance period that banks are extending, it has to effectively get paid back as a jumbo payment at the end of that time period. Is that correct? Or is there any talk about that being either forgiven or tagged on to the tail end of the loan, so just extends it by another 3 or 6 months?
Yeah, some of the jumbo lenders are allowing you to tack them onto the back end, and to not have to make the payments when until you go towards the end of the loan. For Fannie Mae and Freddie Mac, we're still waiting for the guidance as to whether or not they're going to allow that.
I see. So it depends on the originator or the holder of the loan.
Yeah, really, who the loan servicer is, who you're sending your payments to. They're the ones to contact to request a forbearance and to find out what the options are. And of course, another important thing about the forbearance, and it's important for everybody to lenders, but it's to make sure it's not going to impact their credit. It's my understanding that it's not supposed to hit the credit reports, but we all know with lenders, sometimes when something's not supposed to hit the credit report, it does. So you just want to clarify that up front, so you know.
And Bart, just to confirm, the connection froze for a second there, and you were saying something what I think was very important about credit score. So was that forbearance and its effect on our credit reports?
Yeah. So if you have a forbearance agreement with your lender and you're not making payments for 6 months, you just want to make sure that you don't end up with mortgage late showing up on your credit report. And with forbearance agreements, it's not supposed to impact your credit, but you just want to make sure and to have the conversation with the lender just to get reassurance that that's the case is highly recommended.
Got it. That's helpful. Good. And as you've mentioned, it's up to each borrower to reach out to their servicer and have that conversation with them directly.
Yes, and it's my understanding it's a pretty long hold time. So put on your Bluetooth and be going for a hike or doing some work and wait on hold for an hour, however long it takes. But ultimately, you'll get to somebody, and if you can call it off-peak times, that can help as well.
And hopefully you're not calling while hiking in dead spots, because then you have to start over again.
You lose your place. That's right, Ruben.
You'd mentioned that depending on the loan servicer, that the terms of the forbearance are different. And then if I heard you correctly, you said that you can check by just referencing their address. Is that correct? That you can help them figure out?
There's a way to check. Yes. So for conforming loans, we can check on a website to see if your loan's owned by Fannie Mae or Freddie Mac. And then once we find out what it is, then we can look at their current guidance. And those rules will just be more solid and formulaic for Fannie Mae and Freddie Mac loans. And we don't know who owns our loan as borrowers, but if you did a conforming loan and if that loan amount's below $765,000, it's changed year to year. But if the loan amount's below that, then possibly you have a conforming loan. And if you shoot me your address in an email, I can email you right back and tell you if it's a Fannie Mae or Freddie Mac and send you a link to the guidance.
All right. Well, since you've offered, I'm going to pull up your email address so folks can see it and send you an email. Sounds like a good enough service to provide. So thank you for that. So Bart, tell us this. If let's say I'm an existing homeowner, whether it's my personal residence or as an investment property, and perhaps doing forbearance is not necessary at the moment, but can I still take out a home equity line of credit or at least open a home equity line of credit so I have the funds available should I need them?
Yes, lenders are still doing home equity lines of credit. And they come in different forms and sizes and shapes, but they can be done with no closing costs. One thing that has happened is the guidelines have gotten tighter. So some lenders are capping the size of home equity lines of credit at $250,000. And some lenders that might have otherwise allowed you, if you only had say you had 20% equity remaining in your house, they would, give you combined loan first in your home equity line of credit up to 90% of their appraised value. Those deals are backing off to more 80% of the appraised value on average. We still have products that go to 90. They're just more expensive. But yeah, it just doesn't hurt to apply for a home equity line of credit and have it set up should you need it. If something happens to your income in the middle, or you're temporarily laid off, then that loan won't close until you're back, in your job.
Okay. So good. And so our home equity line of credits, the whole appraisal used to be a bit of an issue in the normal days, where there was always a larger amount that would require an inspection, or at least a drive-by inspection, and some smaller amounts were just more or less handed out if you called and requested them. Has that changed? Are there thresholds that are easier to get than others?
Everybody wants an appraisal, and then lenders have different rules. At least in the, not HELOCs, but for Fannie Mae and Freddie Mac, the conforming loans, if you're just refinancing existing balance or purchasing a house, then it can be a drive-by appraisal, and the appraiser doesn't need to come inside the house. If you're trying to, you shows up with a mask and booties and gloves and asks you to leave the lights on and open all the doors and meet them at the entrance, and follow them around if you wish with the appropriate distance, or wait outside, and they'll just come and snap photos and measure with their electronic measure and then get out of your house. So it just depends on how much money you're trying to pull out, which lender, and loan sizes. But the appraisals are still being done. The appraisers are being very conscientious and trying to be safe for everyone.
Is it better to go to the same lender that your main mortgage is through to get an equity line of credit, or are there third-party HELOC services that people should be looking at instead?
You don't have to go to your same lender. You can go to any lender to get a home equity line of credit. The guidelines are pretty much the same, with the exception of if you say you had a large investment portfolio with a certain institution that had home equity lines of credit, maybe they would give you a little bit better pricing. Sometimes you get, so check with your bank where you have your accounts. You can also check with your existing lender, and then I can help you with sources for home equity lines of credit too. A lot of it depends how much you're trying to get, what your credit scores are, and what the overall equity is in the house.
Got it. It's definitely something that we've been recommending for a while now, that our clients consider opening, just so that they have cash available should they need it. It generally doesn't cost anything to open a home equity line of credit. But I know that for those folks who just put that off on the back burner right now, might be having a harder time getting them. So it's good to hear that they're still taking place, or still happening.
Yeah, they are. The one thing to be mindful of is that if you have a home equity line of credit on your house and you go to refinance the first, the pricing can be different on the first. So if you want to refinance soon and take advantage of the low rates, you don't need a home equity line of credit at the moment. It's worth considering, whether you get that today or you wait, and you can chat with your lender on what's the best option for you in your situation.
Good. That's good advice. All right. Well, let's shift gears a little bit, and we've talked about existing homeowners, talked about investors, we've talked about folks that might be in trouble and need some financial assistance. What about those folks who are not yet homeowners and want to become one? Can they still get a loan if they found a house that they could buy?
Absolutely. As long as one's employed and there hasn't been a significant change in their income, loans are readily available. People are making offers. I had a client this morning who made an offer. I gave him a pre-approval letter. And we've had clients who are getting accepted offers and buying homes.
Bart, I think
and the visitation people are spending more time online.
Bart, if you can,
okay,
yeah, if you can go back. You started telling us a story about one of your clients, and then it paused.
Yeah, so I'm not sure how far, people are making offers and getting offers accepted on a daily basis. Visiting the property, people are spending more time seeing the properties digitally. But if you're serious and want to make an offer, most sellers will give you access if you show up with gloves and booties and don't touch anything. And same thing for the make an offer, actually, because there are less buyers on the market. I think there's less homes on the market because some people have pulled them off the market. But I mean, shoot, sort of why not get pre-approved if you want to buy and start watching the market and working with a realtor and seeing if you think you should try to make a little bit of a lower offer today to try to get a little bit of a deal, or if as you're watching the market, you might decide to wait a few months. But if you want to buy now, it's certainly a possibility, and it's being done.
Okay, that's also good to know. Bart, I mean, we've covered a fair amount of ground. Is there anything else that you want to mention to either existing, again, homeowners about refinancing, getting new loans in place?
Well, yeah, I mean, it's such an interesting time for all of us. And in my world, like our company, most of our company is working remotely, which is great, and it's going quite well. And initially, when there were the closures in the Bay Area, we had some concerns because some of the county recorders are taking transactions by mail, but that quickly was rectified. And now the county recording offices are recording refinances and purchases electronically. And the title companies initiate those transactions. And most of the title companies are open because they're essential business, but they're not seeing clients personally. So we're signing up buyers and notaries, which we do a lot anyway. And the whole system's moving amazingly smooth, in the middle of this crazy time.
A crazy time it really is. For those of you watching this, I've personally known and have worked with Bart for several years now, and we've thrown some curveballs your way, and you've had to work on some challenging cases, and every single one of them was handled very, very thoughtfully and professionally. So I want to thank you for that. And I also know that you offered for us to display your cell phone number, even that. So if people have questions, that they can reach out to you, which I thought was very thoughtful. So I'm going to put up your email and your phone number so that if folks who are watching this have questions, if they want to check out the servicer for their loan and have you give them some guidance as to what options they might have regarding the forbearance and the rules surrounding that, or just in general, if they wanted to have another resource for their financing needs. Bart, anything else that you want to leave us with? Any additional thoughts or tips?
Well, yeah, the market's clearly a moving target, and don't hesitate to reach out to me if you'd like some guidance, and or have us put your information in our tickler to let you know when rates fall, or reach out to your existing lender or service provider, and just be monitoring the market. It's going to be interesting over the coming months, and it might for us to save some money.
And so I'm not going to hold you to this, but if you had to place a bet, you think rates are going up or down in the next few weeks or months?
I think they're going down. And so does Janet Yellen, if that helps, our former Fed chair.
I trust you.
She said she expects rates to be very low in the coming months. So I'll vote with the former Fed chair.
Okay, very good. Well, with that being said, thank you so much for being here and taking some time. This has been very helpful and insightful. And be well, stay healthy, stay busy.
Well, thank you, Roman. Thank you for letting me be on.
It's a pleasure. Take care.
With you.